Hey guys, with the news of Apple's upcoming press release regarding what people believe to be the new Apple iPhone 12 tomorrow on October 13th, what should you do as an investor? Should you buy more Apple stocks or should you wait until the iPhone gets released? Well, in this video, I'll talk about why the iPhone 12 is important, what you should do if you're looking to buy Apple stocks, and I'll give you 3 alternatives into how to buy into Apple stocks. Hey guys, welcome to my channel. If you're new here, I'm Romel, and on this channel we talk about all things related to finance, investing, and building wealth. We discuss mindsets, strategies, techniques, and resources to help you in your journey to build wealth. If you haven't yet, please subscribe. We produce new content every week. Alright, so let's talk about Apple's iPhone 12. Why is it important and what's so good about it? What makes it different than all the other iPhones? Well, to start, Apple is now releasing 4 variants of their iPhone, with the biggest one being 6.7 inches. That's the largest screen they have to date on any iPhone. The current iPhone 11 Max currently has 6.5 inches, so that's a 0.2 inch difference in screen size. The other big thing to think about in regards to the iPhone 12 is that it now has the capability to accept 5G signals. If you looked at one of my other videos, I talk about some of the stocks that may be affected by this new rollout of 5G technology. Well, now that iPhone is now part of this, it might be a good time to capitalize on some of those other companies. I'll leave a link in the description down below so you can see what companies I believe will get affected by this new 5G rollout. So that's the second thing. 5G connectivity greatly improves the transfer speeds of the iPhone. And now finally, LiDAR. LiDAR stands for light detection and ranging. This is a way for the iPhone or any instrument to use lasers to send light out to the environment and take distance measurements based on how the surfaces react to the light. This is not a new feature for Apple. They do already have it on their iPads, but it is new to iPhone. So I think this will change the game and the type of apps that you'll see from Apple. Also, with the new LiDAR technology, there has been rumors that this will greatly improve their self-portrait mode. It's already good so far, but I'm interested to see how this will change the game in terms of, that nice bokeh effect that you get on your portrait photos. All right, now let's talk about when this event is. So to begin with, the iPhone or the Apple event is happening on October 13th, which is tomorrow. And it's getting aired online at 10 a.m. Pacific time or 1 p.m. Eastern time if you're on the East Coast like I am. Apple stock. So Apple, ticker symbol AAPL, currently trades at $124. Over the past week, it's seen some great improvements in its price and in performance. Its 1 week performance is up 8%, which is huge. A lot of people have actually done some option calls and have made money due to this price increase. Regarding Apple's dividend, one of the things that people like about Apple is that it's a growth stock, but it also issues a dividend. Its dividend right now is 0.68%. This is great because a lot of people see Apple as a growth stock, but also they do get the recurring income from their dividends. For those of you that don't know, dividends are passive income or money that's given to their shareholders as a benefit for them owning shares of the company. All right, so if you're not looking to invest directly into Apple, if you're looking to diversify yourself more and mitigate your risk in the stock market, what type of stock should you be looking at? Well, for me, one thing that I look at is an ETF. An ETF is an exchange-traded fund. It's basically a stock that has multiple holdings in companies. And in this video, I'll show you 3 ETFs that have Apple as their largest holding. And stay tuned. These 3 ETFs also have a higher dividend yield than Apple. The first ETF we'll talk about is ticker symbol XLK, and this is the Technology Select Sector SPDR. It's currently trading at around $123. Let's look a little bit further into this stock. Its 1 week performance is also up 5.47%. While it's not as high as 8%, it's pretty good considering that this has 71 companies within its ETF. Now let's talk about its expense ratio. One of the differences between investing in stocks and investing in ETFs are that they do have some expense ratios, which is money that you do have to pay. It's not a large some, but you do generally want to get the lowest expense ratio you can. And this is basically what you have to pay for investing in an ETF. All right, so this expense ratio is 0.13%. Now, in terms of Apple, Apple is currently its largest holding. It currently has, well, let's talk about its five largest holdings. The first one is Apple. This one is 23.59%. Its second one is Microsoft at 20.17%. Next one is Visa at 4.33%. Its fourth one is Nvidia at 4.20%. And the fifth largest holding it has is MasterCard at 3.82%. All of these companies are great companies that are proven to be growth technology related companies. And these are similar companies that you'll see in the other two ETFs that I'll be mentioning. All right, let's talk about some of the pros about this. This ETF is about the same price as Apple. As a recap, Apple's current stock price is trading at $124, and XLK is trading at $123. So they're just right around the same price range. They are both seeing good increases. XLK is seeing 5.5%, and Apple seeing 8%. But the difference, one big difference at least, comes in the dividends. So XLK does have a higher dividend yield, so you are going to get more recurring income from investing in XLK rather than Apple. But one of the drawbacks is that because Apple is a growth stock, or people see it as a growth stock, this means that it has higher potential to increase its value much more than a more diversified ETF such as XLK. So that's one of the things you have to think about. Are you the type of person that likes to invest in individual companies, or do you want to try to mitigate your risk or try to reduce your risk by investing in an ETF, which has a large number of holdings? All right, the second ETF I want to talk about is called ticker symbol VGT, Vanguard Information Technology ETF. This has a larger share price at $331. However, some of the benefits of this is that it has a lower expense ratio at 0.10%. Regarding the top 5 holdings, you'll see that this has the same top 5 holdings. Apple is at 21.78%. Microsoft is at 16.44%. Visa is at 3.7%. Nvidia is at 3.58%. MasterCard is at 3.31%. Its 1-week performance is also up 5.41%, which is in line with what we've seen in the previous ETF I mentioned, XLK. Its dividend is also higher than Apple. Its dividend yield is currently at 0.89%. And one of the biggest differences between this ETF and XLK is the number of holdings it has. VGT currently has 328 holdings, which is almost 5 times as much as XLK, which only has 71 holdings. So if you're looking for more diversity or more diversification in your portfolio, then VGT is the way to go. But ultimately, it's up to you. I'm not a financial advisor. This is just some of the research that I've been doing for myself that I'd want to share with you for educational purposes only. All right, and finally, the last ETF that I want to mention is ticker symbol FTEC, Fidelity MSCI Information Technology Index ETF. And this is currently trading at $97. So of the 3 ETFs, this currently has the lowest share price amongst them. And its expense ratio is only 0.08%, which also makes it the lowest expense ratio amongst the 3. Let's talk about the holdings. All right, so the top 5 holdings are the same as the other 2. Apple is at 21.76%. Microsoft is at 16.93%. Visa is at 3.7%. Nvidia is at 3.58%. And MasterCard is at 3.31%. Its 1-week performance is also similar to that of VGT at 5.41%. Its dividend is a lot higher than Apple and also higher than VGT. Its current dividend yield is 1.09%. So if you're looking for a higher dividend yield and a lower share price, then this is one of the ETFs you'll want to look at. In relation to its holdings, this is very comparable to the VGT ETF in that this has 331 holdings. All right, so now let's talk about which one you should invest in. Well, if you're looking at share price alone, then that's, one thing that you might not need to worry about. And that's only because now that there's fractional share investing, it doesn't really matter about share price, right? You can basically put in the amount of money you want to own one stock. Back then, when they didn't have fractional share investing, you would have to buy, round shares or full shares of companies. But now you can just basically say, I want to invest $100 into each of these companies, and it'll, automatically give you whatever ratio or whatever fractional share of that ETF that it equates to. All right, so if you want the largest amount of Apple exposure with the lowest amount of holdings, then XLK is the ETF for you. If you want the highest amount of Apple exposure with the highest dividend yield and lower share price, then FTEC would be one that you should look at. And if you want a balance of the two with a good amount of holdings, then obviously the VGT is like, one of the forerunners in that. All right, so those are some alternatives to Apple. I know there's been a lot of news regarding people making a lot of money on call options because the share price has increased over 8% in the last week. So it's really up to you. If you're the type of investor that likes to do individual stock purchases, then obviously you should go with Apple if you believe in the company. But if you want to diversify your portfolio and add a good amount of Apple shares to your portfolio and to your holdings, then ETFs are a good way to go. They are both seeing good increases. I mean, it's not as high as 8%, as I mentioned before, but they are still seeing, above 5%, which is still great. One big thing to remember is that when you invest your money in the market, it's generally a lot better because instead of having your money sit in a bank where it's not making any income, you're not getting dividends for putting money in the bank, you're not really seeing any market gains by putting money in the bank. You should just remember that, the stock market does have its risks, but there's ways to mitigate that, such as investing in ETFs. All right, guys, that's what I have for this video. I think a good follow-up to this video, or kind of a spin-off, would be investing in companies that have LiDAR technology. I think now that, Apple is bringing LiDAR to the forefront of everyone's attention, LiDAR is going to start to get more, exposure and, publicity. So I think that's a good segment. I'll probably do that in another video, either this week or next week, but stay tuned. All right, guys, that's what I have. If you'd like to connect with me on other social media platforms such as Facebook, Instagram, or Twitter, I'll leave links in the description down below. If you haven't yet, please smash the like button to let the YouTube algorithm know that you appreciate the content we produce. Also, if you haven't yet, please subscribe. Again, we're a new and growing channel, and anything you can do to support us is greatly appreciated. Let me know if you guys are going to be buying Apple stock, be buying ETFs, or just buying the new iPhone and not putting your money into the market. That's another option. I have iPhone 10, so it's about 2 generations old. So I may be looking into getting a new iPhone, but we'll see. All right, guys, thanks for watching, and I'll see you on the next one.